Hello, everybody, and hello, Francis. Long time no see. Okay, great.
Hi.
Everyone, hi. I'm really stoked to get to hang out with all of the beautiful 71 of you who've joined us live on this here very overcast Wednesday. I don't know, what day is it? It's lockdown, who knows? Days have no meaning anymore. Hi, so today we are going to chat about money and artists and creative careers, which I'm really excited about. I am Beckbessinger, and I wrote a book called How to Manage Your Money Like a Fucking Grown-Up, which I wrote because 10 years ago I was terrible with money, and that, it turned out, made it very difficult to have a creative career, and I wanted to get better at knowing these things, so I learned a bunch of stuff about it. And then, thank you. Yes, there it is. I don't actually have any copies of my books on me anymore because I moved across the world and everything I own is in a shipping container still. It's weird. This is happening because a group of incredibly brilliant and charming and talented young people from the Oakfield School theatre class wanted to ask some questions about how money works, and that I thought was an incredible thing to be asking about when you're starting a creative career, because I know that for me, when I was a youngster, wanted to be a writer, it felt like it was just really difficult to get information about an artistic career as a career and what it means to be essentially a business owner of a creative career. So I thought I would rope in actually a friend that I've known for a very long time, who is the magnificent actor, Francis, who's not only an actor and a voice actor, I think, but also someone who has become really financially savvy himself and has been incredibly generous about giving away his expertise and sharing his knowledge with other people in the creative industry. Francis, how did that happen? Tell us about that.
I didn't want to be a poor artist. I was very clear about that. My mother used to tell people that I was going to study acting, and they used to respond and say, "But Francis got 7 A's for matric," as if like as the thing you did because you couldn't get into a better degree.
Yeah.
And that's an example of a humble brag, by the way. And you know, I picked that up at the time, and I was just so intent on not having to be a poor struggling artist, and I really wanted to prove to those people and to myself that I could do something that I loved and be financially stable and successful. And now, sort of 14 years later, I understand that it's in order to be a successful artist, you need to give yourself the stability, the financial stability, so that you don't have to think about money, so that you can do the work that you want to do, so that you can say no to the shitty job, which is always the pay more, and that you can eventually start creating the work that you want that doesn't exist yet in the world. And in order to do all of those artistic things, you have to first take care of the foundation, which is your own financial stability and your financial independence.
Totally. I mean, like, I hate the way that when I was growing up, it was absolutely this clear dichotomy in how we spoke about art, where either you are a starving artist who does it only for the art and never think about things of the world like money, you're just devoted to your passion, or you're a sellout, you know, and those are your only two options, which doesn't leave, it's not a very enabling space that leaves you in the middle of, okay, but practically, if I'm a young person and I don't have a trust fund, you know, I don't have wealthy parents funding this creative career, how do I actually take those first steps? I remember when I was doing my creative writing degree, my master's degree, I once asked my supervisor for practical tips about how I would support myself in those first couple of years while I was building a reputation. And he literally told me, I kid you not, Sam, have you thought about marrying a rich husband? So I was like, nah, I'm going to be my own rich husband. Nah, exactly. I'm going to give myself stability, as you said. So just in terms of how this is going to work, so the incredibly brilliant and charming and talented young people from Oakfields have submitted some questions that we're going to ask. But you guys who are live are also welcome to ask questions yourself. You'll see at the bottom, there's a cool little ask a question button, and someone has already asked us a great question. Thank you, Madeline. So you can also ask questions there, and we'll get to those as well. We'll try as much as we can. And then the other thing I wanted to say is the reason that we decided to do this publicly rather than just recording something for the incredibly brilliant and charming and talented students from Oakfields is because we also thought this could potentially be a chance for us to raise some money for an organization called the Theatre Benevolent Fund. The Theatre Benevolent Fund do a really great work supporting people in the wider theatre industry, including people who do lighting, the whole support infrastructure that keeps that industry running. They help artists when they can't work. They help with funeral expenses and medical expenses. And during COVID, which as I'm sure you know has impacted the creative careers and professions, and specifically the theatre world, to a devastating degree, they have been running an incredible food voucher program. And they have unfortunately recently had to stop taking new applications for food vouchers because they've run out of funds. I would love it if we could raise just enough money in the session to get a couple more people onto that program. So there's also a donation button at the bottom. If you do have some spare randellas, you could throw their way. That would be much appreciated. Okay, Francis, are you ready? Going to hit you with some questions. Okay, so the first question is that the sad reality in South Africa is that artists live paycheck to paycheck. What practical advice would you give artists to break this paycheck to paycheck cycle?
So the number one thing you need to do is build up an emergency fund. And this is hard because this is the first thing that you do, but it's also the most empowering thing that you do. And this work is as much about empowering yourself as it is about money. It's really actually about standing on your own 2 feet and making space for yourself in the world and saying, I deserve to be here. Mm-hmm. So the first thing you do is build up an emergency fund. And I would start with putting together 1 month's worth of expenses, the most basic things. So if COVID happens and you need 1 month because everything else is canceled, what is that? Is it 5,000 Rand? Is it 10,000 Rand? It might take you 6 months to build up that amount, and that's totally fine. But set yourself a goal of building up 1 month's worth of expenses. And for freelancers who earn an erratic income, I found it really helpful to not think of it of a monthly amount, but to think of a percentage of your paycheck. So you get paid by your agent, but an invoice for 500 Rand for helping someone. Every time you get money into your account, take a percentage off that amount. Start with 5%, ideally 10%, and make a commitment to taking that percentage off every time you get paid. That takes the pressure off periods like now where you're not getting paid. But make that commitment before the money hits your account. Because one day you're going to get a 50 commercial, and 10% of 50,000 Rand is 5,000 Rand. That's going to go a long way to building that emergency fund. And if you only make the decision after you're tempted with 50,000 Rand, you're not going to do it.
Totally.
So, yeah. So I think that's what I wanted to say. About living paycheck to paycheck is to build up an emergency fund. And once you have a month, then you start building towards 2 months, 3 months. I now have one that can last me 6 months. And that means that when COVID happened, it was stressful, but it didn't mean that I had to give up my apartment and move in with my parents, which I think is a reality for many and is totally fine. But because I had that 6 months, it's going to be okay. And it took probably 5 years to get to that point. So it's a long and slow process, and that's fine, but it means that you can weather those times when people pay late or don't pay at all, or you're just stuck between jobs. Cool.
I mean, I love what you're saying. There's so many different things that you're saying there. The one as well actually leads really well to the next question, which is about budgeting, right? Now, I know when I was younger, and I still actually have a real hatred of budgeting. I find it makes me feel stressed. It doesn't feel like this spreadsheet of imaginary things that an imaginary plan of how I'm going to, in my imagination, spend my imaginary money, just never maps onto my life. I really like what you're saying about having these percentage-based rules around keeping your money in different pots. So as a general thing, what is your approach to budgeting if you are someone with an erratic income?
I mean, I've developed an approach over a long time, and I now have an approach where I treat myself like a business, and I have a budget, an annual budget. So I don't sweat the monthly differences. I work out, okay, because I'm now earning money for the next 6 months because I've already got the 6 months emergency buffer fund. But I don't want to go too into that. I think practically a great way to start is to just, and this is in your book, Sam, is to come up with a number you need for a month. We already did that when we worked out the emergency fund. A basic whole number, like maybe you need 8,000 Rand to pay your portion of the rent, to pay your medical insurance, and your groceries and your electricity and your cell phone bill. So get those basic things together, the things you can name off the top of your head, and come up with a round number. And now okay, it's 8,000 Rand each. And the only reason you need a budget is so that you can work out how much can you put away towards paying off debt, and how much can you put away towards investing into your emergency fund, and thereafter into your long-term investments. So you only need a budget to get get past that step quickly. And the concept of pay yourself first is putting that money into an emergency fund before your living expenses, so that if there's no money to get to the end of you just have to get creative. So in that sense, a budget, you should not get weighed down around budgeting. I use the percentage thing. I save a percentage of every invoice, and I used to save a percentage of my invoices, not just for saving, but for investing into my career. So I take 10% of each invoice and put that in of debt, and then I'd pay 10% and put that in towards investing in my career. That means there was always money to go see plays, always money to go to the cinema, always money to pay for a workshop.
And those are, and that kind of, there's another part of that as well, which is tax, right? Because those are tax deductible things. The big thing that I've had to learn to do with my royalty checks is remember, I am going to have to pay tax on them at some point. So the thing that I also do is I take off like 30% and stick it in a different fund. I love what you're saying. The technical term for this thing of like having different pockets of money, people refer to it as enveloping, which is, back from the days when we actually had cash. I sometimes still like to work with actual cash when things are particularly tight. But I also have a number of different bank accounts, and I use them to control my own spending because I have no impulse control, basically. So I have one bank account that I call my fuck around fund, which is where I put in my day-to-day spending money. And I'm 33 fucking years old, and I still give myself pocket money, basically, because I can't be trusted with the rest of my paycheck. And I know that I can spend that money free because all of the other stuff is taken care of already, because I have my rules, percentage rules, like you were saying.
Just following on from that, I use my bank account as a business bank account. It's a personal check account, but I only use it for managing monthly expenses. And then I have a Capitec account, and I put my monthly grocery money into the Capitec card, and I use that in my wallet. That means when I'm out and people want to buy drinks or whatever, then I know that I'm limited by that. I'm not dipping into money that's actually for next month, etc., that's in my check account. So I find that very helpful. Me and my partner, we both put X amount of money onto our grocery card, on just a Capitec card, and then when it's done, you can see it going down. It's not like a check account which has other money that's going to other people or etc. It's much more clear. So as your earnings get more, it can be helpful to simplify things down to back when you were a student and you could only spend the money that's literally in your small little account.
It occurs to me though that having real data is also really important here. So a great way to get the actual real data of where your money is actually going, if you have a business account, I have in the past used free apps like Wave to keep track of my invoicing, and it can also connect to your bank account and tell you exactly where the money is going in and out of. It's basically like a business package, but it's free and you can use it as an individual. Or if you're working more on an individual level, there's another free app in South Africa called 22/7, which is really helpful because it actually tells you how much you spend on everything every month, which helps you arrive at those numbers in the first place, which is really helpful. I'm going to take a question from the things up. Take a question from you guys. Francis, what ways are there for a freelance artist to build a credit score? And what is a credit score? Do you want to start there?
Yeah, a credit score is basically an industry standard kind of way of measuring your history of paying off short-term debt. Short-term debt is credit cards. It's even considered, cell phone contracts are considered short-term debt, car payments, and even home loans. So your behavior around paying down those things, store cards particularly. There is a sort of a myth that was passed down from our older generation that you need a good credit score in order to one day buy a house. Now, as we're going to get to later, we actually, the current younger generation are not that attached to things like buying houses and cars, nor is it necessarily a smart financial decision. It's more of an emotional one. But on the credit score front, I don't think nowadays you need a credit score. When I applied for my first home loan, I literally took them. I went to SA Home Loans and I said, this is how much I've saved. You can see my savings accounts, and they actually qualified me based on that behavior because they could see, and they're the only institution that actually looks at behavior, not just at paperwork like all the big banks. So that's a good example of how actually managing your money well can get you what you want, as opposed to, because the problem with a credit score is that you have to get into debt. So you have to have a store card, which is dangerous behaviorally, even a Woolworths card or a whatever, I don't know if the other, but those things are behaviorally dangerous. Even doing the fancy footwork of putting your salary or your grocery budget on your credit card and then using your credit card and then paying it off at the end of the month is dangerous. I used to do that. I've stopped doing that because I could see that I always used to spend more. I now forego all point systems, all reward systems, and I put my spending money on a card where there's no rewards because I then have real discipline and I'm not lured into spending more. So my position is don't worry about a credit score. Build up your savings so that you can pay 20% down for a home loan. Then they don't give a shit about it.
I love that. I will say, though, it is a great thing to know what your credit score is. And mostly actually because it's a great way to check that there's been no fraud in your name. So you can get a free credit score every year. So just to say in general, I will post this whole video on my website, which is likeaffuckinggrownup.com. I think I should know my own website after this, and we'll have some links to all the things we're talking about, so you don't have to worry about remembering them. There's free websites like TransUnion where you can go and check your credit score, and you should do that every year because I've heard horror stories of people discovering that people had open debt in their name and stuff like that. And you can check what your credit score is. There are some practical ways you can improve your credit score if you want to, but Francis is entirely right. I think you also have to be honest with yourself about what type of person you are. I also could not have credit cards. I got into, at its worst, more than 600,000 rands worth of debt in my 20s because I cannot be trusted with credit. I can't. And it took me years to climb out of that hole. And I don't want that to happen to you. So yeah, there are ways around it now. If you keep good financial records as well, what SA Home Loans and other home loan originators will do now is they will actually let you submit your bank records instead of having a great credit score. But check your credit score anyway. It's important. Okay, thank you. Next question. I know it's important to save, but as a young freelancer, my income won't be consistent. If I can't know in advance how much I will get each month, is it better to invest in something where I pay small amounts regularly or big lump sums irregularly wherever I can? It's a bit connected to the one we spoke about before, but is there anything you want to add to that?
It basically, what we said earlier about saving a percentage, it takes you away from the feeling of I don't earn enough to save, which is a complete fallacy. Mm-hmm. Saving is a habit that you build when you don't have money, so that when you do have money, you are saving it and not living large. Yeah. So most people who are good with their money, it's because they developed the habit under trying circumstances, like Sam said, when she was in debt, or when I had to pay off my student loan and was a struggling actor. I built my savings habit by paying off my student loan. And so don't underestimate the power of the behavior that you develop and the discipline and even the enjoyment, believe it or not, of saving that comes from, you are taking care of yourself, and that starts to get reinforced. So even if you're earning 500 Rand a month from a side hustle, and I think it's reasonable to say that you may not be able to take anything from your acting money. But I answered this to other questions, but I'm going to bring it in now. If you need to start a side hustle to save, then start a side hustle so that you can save, and put everything from that side hustle into building your emergency fund. And then once you have an emergency fund, you can kiss the hustle goodbye. I was proud for a long time and wanted to only live off my acting income until I realized that it was foolish. And I took on a side hustle, proud, and I'm proud of the fact that I did what I needed to do to build up the savings. And it now means that if I don't want to save anymore, I can just stop doing this side hustle. So now it's a choice. I'm not forced to this circumstance. I'm choosing to have more savings and to work harder. Okay. But I know that, I'm starting to not like working this hard, but I can get to a point where I can stop. So I'm voluntarily doing it. And then, I think those are the important things. It's the habit, and start with a percentage.
Can I build on your thing
and put
about
it in a different?
Yeah. Oh, sorry. Sorry, I think there's a bit of a lag. Sorry, I interrupted you.
No, go ahead.
I just was building a thing about side hustles because this is a great thing to introduce. I love side hustles. One, because diversifying your career, diversifying your income sources is one of the best ways to withstand any kind of emergency, including look around, right? The reality is as well, I know very few artists, even artists who are really at the top of their creative game, who haven't had side hustles for quite a lot longer than you would have expected, I think, in their careers. I know of writers, one of the writers, who's a friend of mine who won the University of Johannesburg Prize, who's one of the most famous and successful and incredible writers in the country, still has a side hustle doing creative corporate workshops. And it's a side hustle I know she really enjoys sometimes. And it means that she can go through periods of doing some of that kind of work, which is really lucrative. And then that can bankroll her to have complete headspace to go and write a novel for 3 or 6 months without thinking about money at all. don't knock the side hustles. Side hustles are great. And the reality is most of us will need to have many side hustles in our life. Yeah. Okay, shall we take another question from the live audience, from the live studio audience? Okay. Does the industry have a retirement fund that artists could belong to? Or could we establish one if we don't have one, please? Would a retirement annuity do?
Sorry, what's the second half of that? What would it do?
Would a retirement annuity do? So I think it's a question of, I think the real intention underneath this question is, as a creative freelancer, how the heck do I save for retirement if there's no like industry retirement fund to sort it out for me?
So the short answer is there's no industry retirement fund or any support. And that is both a good thing and a bad thing. You know, the fact that we can you hear me, Sam? Because you've just frozen. If someone can just pop in the comments whether you can hear me. Okay, so I'm going to carry on, and maybe Sam will join us again. So the fact that the industry doesn't offer anything means that you have to take care of yourself. And actually, in terms of your financial life, it is better for you to take care of yourself. And there are some rewards you get. Particularly from SARS as an independent contractor, which you can mobilize to your benefit. For example, if you save in an RA product, you can claim whatever contribution that you make to an RA product back from tax, and therefore reduce your tax liability. And often that means you get money back from SARS when you file your tax return. Now, many of you in your final year, you won't have yet filed a tax return, but most actors working and theater practitioners will have 25% tax deducted from all of their fees paid by theater producers or commercial producers or film producers. And that money is more than the tax that you're supposed to pay. And you get most of that back. Kay's posted a great link there. But you're saving for retirement, an RA is a good option, and I encourage you to look at Sam's website for what exactly an RA does, and how best can be used as a freelancer. Just for those of you who may not know, an RA is an optional way of saving for your retirement outside of a formal structure. Like if you're employed, then the employer may have a retirement fund and make contributions for you, or you make contributions to that employer fund. But as a freelancer, there's no such fund. You sign up with a provider yourself, like Outvest is a great option. It's very important that you do not buy retirement products through insurers or brokers. Go directly to companies like Outvest or 10x, that's the letters 10x.co.za, and look for low fee index tracking passive investments, which is the best way to save over the long term because it's the least amount of fees. There's no financial advisor fees. There were many questions about financial advisors. We may not get to them, but the short answer is avoid any commission-based financial advisors. If you must go for the financial advisor, find one that takes a once-off fee to create a plan for you. But for anyone that doesn't have complex financial situation or inheritance to deal with, learn yourself, go to Outvest, start small, put 1,000 Rand in the first year. And I encourage you, I'm going to post a link after this to a podcast called the Fat Wallet Podcast. There are over 200 episodes which talk about basically DIY investing for yourself. And as a freelancer, you basically have to take this on as part of your own business, and that is managing your long-term retirement savings. I'm just going to see if Sam is able to join us. I'm just going to send her a mail to say that. And I'm just going to see if there's a way to join, for her to join again. But otherwise, I'm just going to carry on because I've got the questions here. So there was a question. There was a question around short and long-term savings. So I just wanted to differentiate the different types of savings. So your emergency fund is the first thing you need to build up, because that helps you to weather any unforeseen events. And particularly for us, the time is no work. Once and only once you have a robust emergency fund, at least 3 months worth of expenses, then you're ready to start saving and investing. Saving, the difference between saving and investing, to me, saving is for something that you are saving for in the next, say, 3 to 5 years, or anything under 5 years that is specific. Like you're saving because you want to go overseas, you're saving because you want to pay for a wedding, you're saving because you want to do a short film and you want to pay for it, you're saving because you want to produce a play. And that is done fairly straightforward. You find the best interest rate you can, and you make a commitment to either put lump sums in there or regular monthly contributions, and you just invest it basically in cash. Investing is a lifelong, is for your life. Investing for your financial independence. I don't think of retirement, I think of financial freedom, and I think of it as a time in my life where I will no longer have to take jobs or do side hustles, and I only will do the work that I want to do, that I enjoy, and the money is secondary. That's what my interpretation of retirement, and I think of it as financial freedom. And to get to the point is going to take a really large lump sum of money that's going to be built up over my whole life. The advantage of starting young is that the power of compound interest can do half of that work for you. It's much, much harder to build up the amount of money you need if you only start in the middle of your life. I'll give you a really great example. I started putting money into a retirement product because that's what was recommended to me at about the age of 24. So older probably than most of you in your final year. And I think I put 10,000 in. I was fortunate. I did a lot of commercials, and so I had 10,000. So I decided I'm going to put 10,000 towards my future. And I started, and every year since then, I increased it. And by the time I got to the age of 30, I did some calculations, and I think about 2 years ago, or one or 2 years ago, the amount, the first 10,000 that I put in had doubled. Sam, you're back.
I'm so sorry. My internet went down. I'm so sorry. I'm sure you're doing a great job though. Keep going.
I'm basically talking about the difference between short and long-term saving, and I'm talking about saving for financial freedom as opposed to retirement.
Brilliant.
And I'm telling a story from my own life, which is I made my first retirement savings contribution at 24, and I put 10,000 Rand in. And it was a bit of a moment about 2 years ago when that had doubled, because it was in an old product, and so I couldn't add to it. So it was like a little test. So it reached 20,000 based on growth alone about 2 years ago. So about 8 years after I started. But the example I want to get to is that I made regular contributions each year, and by the time I got to 30, I worked out that the amount of money I'd save between 24 and 30, the growth, the compound growth on that from 30 to 65 would be equal to all contributions from 30 up to 65 plus that growth. I don't know if that makes sense. But basically, it would take me 35 years of new contributions and that growth to equal the compound growth of the initial 6-year period. So it just shows you how the earlier you start, even if it's a small amount, even if it's 1,000 Rand and not 10,000 Rand, that money's going to double, and then it's going to double again, and it's going to double again. And if you've ever tried to fold a piece of paper in half and half again, it gets thick pretty damn quickly. So you want to increase the amount of doubling that's possible across your lifetime, because that's free money. And if it's in a vehicle like a retirement annuity or a tax-free savings account, that money is not, the growth is not taxed. So that is essentially the advantage of a retirement annuity. The other advantage is that you cannot touch that money. So if you hit a really bad patch, you lose your job or you cannot work again as an actor, you cannot touch that money. So it's protected from yourself until you reach, I think 55 is the earliest age you can get it. Shame, Sam. Okay. Well, you can just type me little things if you want. I have got the questions in front of me, so I think I'm just gonna go through the questions. And if you have comments, Sam, you can just add your little comments in writing, and everyone will have both. So perhaps if anyone has a question around the retirement stuff that I haven't covered, or maybe I've provoked a question that hasn't been answered, please put it in the comments now, because otherwise I'm going to move on. Just touching on, I've mentioned tax-free savings. So both retirement annuities and tax-free savings are initiatives by the government to encourage you to save. And both of them offer legislative kind of containers, and they can, product providers can create products where the growth on your savings is not taxed. Normally, if you buy something, an investment, and you sell it, you have to pay tax on the growth. And that over a long period of time can really erode that growth. Just ask anyone who's bought a buy-to-let flat and had to sell it again. So a retirement annuity is the most traditional and well understood vehicle for saving. And it's earned its position as a well-loved one because you get an immediate kickback or subsidy from the government. And this is particularly apparent if you, at the end of the tax year, which is end of February, you put a lump sum into your retirement annuity. Say you put 10,000 Rand. You can do some calculations and work out that SARS will probably give you about 2,000 Rand back at least of that money when you file your tax return, because any amount you put into an RA reduces the amount of tax which you have to pay on your income. The caveat here is that this only applies to people who are earning beyond the threshold of tax, and that's I think about 80,000. So if you're not earning 80,000 a year, don't worry about an RA. A tax-free savings account doesn't have the limitations that an RA does. An RA is limited to territories you can invest in. So you've got a limit to offshore and you've got a limit to equities. I'm not going to go into the difference between equities and other investments. Equities are basically shares, but I encourage you to do your own research on Outvest and the Fat Wallet podcast into why equities are the best form of long-term investment. And Sam's book and website also has fantastic entries on that topic. Sam's got some good percentages that she posted, which as an artist can be incredibly scary. And that comes back to the side hustle thing. You know, it was very clear to me that I couldn't save 15% of my income. I could live or all right, actually, on my acting income. I was living, in a shared house, etc., etc. But I could live on my acting income. But I realized that if I wanted to not get old and have to rely on other people, I would have to start earning more so that I could save more, because I couldn't really downgrade my living standards. I needed to be close to where auditions were, etc. So there's how much you can downgrade your living in order to save. And that's where the side hustles come in. Sometimes when you're young, you just have to work harder, juggle more things, and take on side hustles. Unfortunately, that's the capitalist system we live in. But there's something empowering about taking control of your own saving and deciding, I'm not going to be poor when I'm old. I'm going to rather work harder now. And what's great about it is that you learn so much that it puts you in a position of control, and as opposed to a passive position. And we all know as actors, there's so much that's out of control. You get told where to audition, what to do, what to wear, what to say, where to stand, whether you're going to work or not, whether you're going to work next week. No, the theater's taking a break. You're not going to get paid next week. Everything, so things are taken out of your hands, but how you manage your money and your future, that is absolutely in your hands. And if you need to take on a side hustle so that you can save in the long term, you need to do it. So just to circle back to the tax-free savings account, a tax savings account is basically an account you can open with any financial institution. You can open it with a bank, but I caution against that. And it's like a container in which you can buy investment products or invest in certain things like shares or ETFs, which are baskets of shares. But it protects your growth from being taxed. And I'm going to leave it at that, I think, because that's a topic that has to be researched individually. But just to say that an RA is not the only product that's available to you. A tax-free account is, the research shows that it's as beneficial over a 20-plus year period in terms of your growth, and you're not limited to investing as much in South Africa. You can invest all of the money offshore if you want to, but whether that's the right strategy for you, I would encourage you to first educate yourself. I think on that note, it may be helpful in our last 15 minutes just to chat about the industry. I've got questions around insurance brokers and financial advisors, which I want to tackle. So on the insurance side, it's a tricky one because there's some things which don't insure can really create problems for you if they happen. For example, if you are working and you're earning a regular income and you have commitments and you possibly have dependents, you break a leg, lose, or if you burn your face and you can't be on camera anymore, that is a serious problem, especially if you don't have family that you can fall back on to take care. So once you're earning regularly, disability and critical illness cover is important. And again, this is covered in Sam's book really well. So there are some things which are really important to cover like that. Unless you have children who depend on you, you do not need life cover. This question is from someone who has an insurance company trying to sell them product. And my advice is basically to be very cautious about accepting anything from a broker. A good rule of thumb is if someone's phoning you, then you do not need what they are selling, and it's in their interests. You go in search of the things which you need, and you go find the right company that provides that needs. So a good rule of thumb is to agree to anything someone comes and tries to sell you, because it's always more in their interest than in your interest. Do not only insure on the short-term insurance side, that's insuring things that may get lost or stolen. If you use your car for work, obviously you have to insure your car. But don't insure your cell phone. If you lose your cell phone or it gets stolen, you're going to have to deal with a hand-me-down, or you're going to have to, what I actually did, because I was paying 200 Rand a month for my cell phone insurance, is I stopped my cell phone insurance, I took a risk, and I put 200 Rand a month into a time bank account, which up until July offered 10% interest. And after a year and a half, I had enough money in there to buy the cell phone that I have. And now I've got my own little cell phone self-insurance account. So don't over-insure. Don't insure the contents of your home. If unless you're very financially stable, you're just going to have to live with if there's a flood. I mean, that's such a rare occasion that you can find a place to stay. If there's so cut down on your insurance and don't sign up for new insurance. Sam's put some great resources there. Don't get life insurance, but once you are earning regularly, and if you have commitments, like you maybe have a bond, or if you have a partner who relies on you, or you have parents that rely on you, then critical illness and disability cover is great. It's also great to get when you're young and healthy, because it will be fairly inexpensive. But this is a bit technical. Do check out how the premiums scale, because sometimes you'll get a quote that's cheaper, but the premiums will scale this steep over a 20-year period. You get other policies which are maybe a little bit expensive, but the premiums are steady and more gradually growth. And this is where a financial advisor can help, but be very careful who you choose. You find the person, and potentially interview two, and make sure that you understand the commissions. The commissions for selling you a policy like this are sometimes 12, 15,000 Rand. It's a large amount of money. So understand what they are getting out of it. There's a company in Joburg and Cape Town called Galileo Capital, and you can pay them a once-off fee, do a financial plan for you, or you can get them to find policies for you. I'm now going on to the financial advisor topic. So there's a question here of someone who had bad experience with financial advisors, and can they trust a broker? And I'm of the opinion that unless you have a very complex situation, as in maybe you've inherited money, or there's a big lump sum of money, I would do all of your investing yourself. And if you have money that you want to invest, rather put it in a interest-bearing savings account while you learn and figure out the best way to invest it, and practice and start with small amounts of money. Or if you don't have any lump sum, then just start with small amounts of money, and that way you don't have to put your trust into a financial advisor. And then just to reiterate, if you do need to go to a financial advisor, make sure that you are going to one where you pay a once-off fee in order for them to do a financial plan for you. But remember that if it's a policy sold by another company, say an insurance policy, they are getting a commission. So you do not need to pay a broker, but you do need to choose wisely, because most brokers are affiliated to different companies. So you'll get an independent broker, but they only sell Old Mutual products because they understand the complex world of Old Mutual. So be very wary of that, and ask your financial advisor or broker what are the different companies that they can get quotes from, and make an appointment and go in person and allocate a lot of time. It's probably about an hour and a half to 2 hours, and drink a cup of coffee and make sure that they explain to you the difference between the policies. And remember, they are getting paid. Even if you don't take the policy, this is their job. So make use of their time and expertise. Some comments around health insurance, which is important. For a long time, I was happy to go to the state hospital because I couldn't afford it. and that is okay. I now have a very cheap hospital plan only, and I pay for doctor's visits out of my own pocket. Thanks, Katie. When it comes to tax, there's going to be a whole session on the South African Guild of Actors that they are hosting. So please check out South African Guild of Actors on Instagram and find out where their tax session is going to be. Tax is a very specific, complex subject, and I'm not going to go too much into tax now. But as is said by Kay below, it is definitely worthwhile to pay a professional to submit your tax return. Even if you say you earned 80,000 Rand, you should get all your tax back, but it was one tour and they took 20%, 5% tax off. So you have to file a return to get that money back. What you can do is you can actually just take the paperwork you need and go into SARS, sit and wait, take a podcast, and ask the SARS person questions. But this also particularly good to do this if you are due all of your money back. That is, you were forced to pay tax up front, but it's all due back to you because you earned under 80,000 Rand. Go into SARS yourself. They owe you that money back. They must sort out how to do it. But as Sam has said, paying someone to do your tax is definitely worth it because it costs between 500 and 1,500. Do not pay more. There are people who will charge you 4 grand to submit your tax return, or worse, will charge a percentage of what's due back to you, even though it's due back to you by your right because you were taxed higher than you should have been. So avoid those companies. Find a small reputable company or an individual, ideally. But use the opportunity when you do all of your money back to go into SARS. It's a good learning opportunity, and then you'll never want to do it again. So then the next year you pay someone. But it's very important to keep financial records of expenses that you incur as an actor, and these are wide-ranging for any freelancer as long as you can justify it. If you have to go have your hair done and you have to have braids put in because you need to look a certain way for an audition, that is a tax-deductible expense. I'm not going to go further into that. Okay, we got 7 more minutes. I think we're wrapping at 2. I think for where to find a good tax practitioner, I would go to the South African Guild of Actors Instagram or Facebook page, or email the South African Guild of Actors via their website. The South African Guild of Actors is a great resource. It's also a fantastic organization. They are fighting for your rights, and they are negotiating with SARS, and they are negotiating with producers on your behalf, whether you are a member or not. But I encourage you to become a member. It is free for students in their final year. And then once you start earning an income, it is about 140 Rand a month. But it means that if a producer doesn't pay you, you can get their legal team to follow up on that, because I can tell you now, your agent is not going to compromise their relationship with the producer to try and get you your 15,000 Rand, which for you is the difference between living next month but for them, it's not worth costing them their business relationship. So it's very important that you have representation through the South African Guild of Actors and not just through your agent. Okay, we're going to wrap up with, let's take a question from online. Okay. Shouldn't we have medical aid and life? Yes, life cover if you have children. Okay, here's a question. I've been actively saving extra money in my house access bond. From my experience, the interest on a bond is so high over time, it makes sense to chop that down as fast as possible and then start saving elsewhere for independence. Considering I'm able to access the funds at any point, does this sound like a good plan? Okay, this is a good plan, and I do it myself. In fact, I keep my emergency fund in my access bond, and you can actually do some calculations and work out that you will pay off the bond at least a good 3 years earlier and save hundreds of thousands in interest. These are all, I'm thumb sucking here, but basically the way to work it out is the percentage of your bond. If it's a 10% bond, that is a higher savings than you can get in a bank, and it's completely safe and it's tax free. So if you put 100,000 into your bond and that grows, it's not going to grow. It's going to save you 10%. That's the difference. If you put money in a savings account, you will get the interest back. If you put money into a bond, you will save the interest over time, but it'll still always be 100,000 Rand. But as an independent contractor, it is gold to have that money accessible, but helping you. It's accessible within a day, immediately. That's a great strategy. The last thing I think I want to say, actually, I'm going to take a quick question and then I'll wrap up. How to avoid people taking advantage of you. You avoid people taking advantage of you by knowing your shit. So, the reason why I'm in the position I am is because I don't trust what people say to me. Sounds terrible, but I don't trust what the financial industry says to me. I go and I do my own independent research, and I read my contract, and I double check with my agent, and I treat the financial side of my career as a business, and like I'm the CEO that should know everything about what's going on. And I use the time that is afforded to most actors in between work, unless you're fortunate to be working constantly, to do this kind of research. And for me, and this is what I'll end with, for me, it's about empowerment. So as I said earlier about everything being out of your hands, this is the area where you take back control and you empower yourself with, first of all, understanding your own relationship to money, and then understanding how that interacts with the world out there. And it's very important that you tackle the emotional side of it and not just the numbers side. Many people have incredibly difficult and emotional relationships to money. And that can come from their parents, how they grew up, what they did or didn't have. And particularly in work like this, which is so close to us as people, it's very difficult to distinguish you from your work, your value, and how you are valued and how you are remunerated. Obviously we know actors are not paid what they should be paid. So this is the area where you build up yourself and you empower yourself with knowledge, with good behavior, with understanding, with clarity, with discipline, and with gentleness and understanding for the fact that you need to start small and small wins. Start small, pay off the smallest debt first and give yourself that win. Build up an emergency fund for 1 month. I framed the statement of the first time I built up 10,000 Rand savings and I put it on a wall in a frame. That's congratulating yourself. Guys, 3,000 Rand raised for the Theatre Benevolent Fund. That is absolutely fantastic. Thank you so much for your generosity, for joining me, for taking time towards yourself as an artist. And believe me, it is possible to be successful, to have, I'm sitting here in a home that I bought myself with my partner. We are both. It's not a good idea to buy a house, but if you care about it as much as I did, do it, and you can do it on an actor's earnings. Okay. Thank you to Sam Beckbessinger for making this happen. Thank you to Jackie Rents. Thank you to Oakfield College and all the other students around the country listening. I hope to come to more theatre schools and eventually create a curriculum for final year students. It's been great having you. I will send my answers to all the questions that were submitted to Jackie, and Sam's going to post some resources. and we're going to post this whole video online, so share it with your friends who weren't able to join today. And I hope to see you on stage, in an auditorium, on a film set, and hear what you're able to do from this day forward. Bye-bye, everyone.